Hey, what's going on, guys? Today we're going to talk about RSP and what exactly it is and who might be possibly interested in investing into a fund like this. So let's go ahead and dive into it here. So it's managed by Invesco. It is targeting the S&P 500, but it is splitting the allocation equally across those 500 or so funds. So let's see kind of how it's performed here on the Google chart. 6 months, it's up 11%. Year to date, it's up 16.11%. So it is lagging just the S&P 500 a little bit there. The past year, it's up 30%. Past 5 years, it's up 63.92%. And then all times up 600% since 2003. So market cap's $26 billion. Let's go ahead and look at some of the data here provided by Yahoo Finance. So currently a yield of 1.5%. Net assets under management, $66 billion. So it's a pretty big fund. The expense ratio is definitely a little bit higher. And I think that must just be because there's a lot more work that the fund manager has to do per se. They have to manually change these funds as, some funds perform better than others, and kind of so forth there. The objective of this fund, let's see if we can read about it here. The fund generally will invest 90% of its total assets in securities that comprise of the underlying index, strictly in accordance with the guidelines and mandated procedures. The index provider compiles, maintains, and calculates the underlying index, which consists of all of the S&P 500 index. So the holdings turnover, so there is a lot bigger of a turnover here, because like I mentioned, stocks go up and down. Morningstar style box. So instead of just the large cap, looks like it's getting a lot more different style stocks there. And the thought with me, like the reason that someone might want to look at funds like this is if you think, obviously if you look at the S&P 500, right? Like what percentage of the top 10 does the fund consist of? So you can see 34.9% of the total assets is allocated for these top 10 holdings. So, the Apple, Nvidia's, Microsoft's, Amazon's, Meta, and so forth there. There's a lot of allocation to that. So if you kind of want to diversify a little bit more there, you could look at, something else like RSP, for example. Performance-wise, it's like we talked about earlier, it's lagged a little bit with from the SPY, but it'll be interesting to see how things can shake out going forward. 2023 did 13.7, 2022 did negative 11%, 2021 did 29%. So, needless to say, it's been a pretty good fund. Maybe not as great as SPY, but going forward looking. If you want some more diversification, it could be a potential fund you could take a look at there. Okay. Coming back here to see if there's anything else we want to kind of look at. I do kind of want to allocate RSP Morningstar. Okay. Switch screens here. I want to look at Morningstar because they do a great job. So they show some other metrics that I like to look at. So the first thing I'm going to look at is they rate their funds out of 5 stars. So 2-star is not the greatest per se, but we'll look at that later. But yeah, kind of what I wanted to look at is this stock style chart. I really like to look at this and allocate ETFs by their style here. So you can see the blend. It's not all large cap. You have a good bit of mid cap and large cap here. So something to look at for sure. For the most part, looking at this granularly, it looks like a mid cap ETF. And I think that's a lot of just because it's equally weighted across the top 500 stocks. So you are gonna, spread your diversification out across there. Still pretty comparable though. Technology is only 16% versus SPY, which SPY is getting really big. I don't know what SPY is up to. Let me look at that real quick. So 16 and 14, those are the two highest. So if we go look at SPY, just to see how that compares, we'll look at that real quick. Portfolio. Yeah, so you can see the difference already just as far as that goes. It's definitely a lot major of a tilt towards the large cap there. Yeah, so technology is 33. Industrials is not even the second biggest. It looks like probably financial services is the second biggest. Yeah. Surprising healthcare is not up higher. But yeah, so technology is 16% versus 33. So RSP is definitely a lot smaller of allocation towards tech. And, that's understandable because it's, not market cap based. If it was market cap based, it would be more of kind of like what SPY's like. But this is just, split allocation across the board for all the funds within here. And you can see here, yeah, so 500 holdings, percentage of assets in the top 10 holdings, so only 3% versus that, I don't know, was it 39 or something crazy in SPY. So yeah, good to note there. So you're getting a lot more diversification. Like I mentioned, it's more of a true almost, buying the market, not necessarily based upon market cap. Let me see if I could pull up any more details here for us. We can take a look at. Second here. Okay. I'm going to pull up Invesco's RSP website. Okay, here we go. Let's hop over there real quickly. Okay, so looking at their website, see if we can see anything else about their ETF here. 20 years ago, the Invesco S&P 500 Equal Weight ETF RSP helped reinvent how clients access the S&P 500. I apologize. If you're invested in funds that track the S&P 500 index, your portfolio may be too concentrated and missing out on potentially higher potential returns. RSP can help address both concerns with the added potential benefits of cost effectiveness and tax efficiency. Yeah, so, since it's structured as a ETF, they don't have to distribute their capital gains. So, there is a lot of turnover in this fund, but they don't have to necessarily pass that on to their, investors because they can keep it within the fund. So that's just something unique there. So this is a great illustration. Weights to companies S&P 500 index, the market cap based. So one of 100, like 71, or one of 100 makes up 71% of the S&P 500, whereas 1 to 100 is only 20%. So this is crucial right here. You're some of these smaller companies, you're only getting 3%, 5%, 8%, 14%, 71%. Whereas this fund, it's equal across the board. So that's really cool. I really like that illustration. It makes a lot of sense to me there. Yep. So really good, helpful information on their website. Definitely go check out their website for sure. And just kind of keep in mind that, it may underperform SPY, and, no one can predict the future. You might just be better off sticking with SPY. But if you already have SPY or you already have a total stock market index based upon market cap, this is another investment you can kind of look at and kind of say, hey, I want more of as we talked about, a diversification across the 500 stocks versus just a 70% allocation to the top 100. So not financial advice here, as always, but just do your own research. Go check it out. RSP. Let's see if there's anything else here we want to look at real quick. So like we talked about, just the specifically, I was talking about the cost and tax efficiency. The expense ratio is high, that's for sure. But it does look like you're getting average annual capital gains distribution of 0%. So that's major. So you can be able to hold this fund in your taxable account and not have to worry about, per se, the capital gains being distributed to you there. So really cool there. And that's probably why this expense ratio is higher. Like we talked about, the turnover rate is really significantly higher than other typical index funds. And that's because, like we mentioned, you have to, as stocks perform better, in order to keep these allocations, you're going to have to rebalance pretty regularly. So just keep that in mind there. So that's going to be it for today's video. I just kind of wanted to bring some light to this fund and provide it if anyone's looking for some other diversification in the S&P 500, but you kind of want to invest into it a little bit differently and see if you can kind of benefit from some of these smaller S&P 500 companies performing better. But yeah, guys, that's going to be it for today's video. Once again, ticker symbol RSP, managed by Invesco. Go check out their website, do your own research. Let me know what you think down below. Would you consider this fund instead of SPY? Just kind of the last thing I want to talk about is RSP also does allow weekly options. So that's really cool in that sense that it's not only a monthly contract ETF, but you can sell weekly options on this fund if that's something that interests you as well. So once again, guys, thanks for watching. Please like and subscribe down below. And until next time, take it easy.